Japan and the US have been loyal friends since the end of World War II, even after the atomic bombs of Hiroshima and Nagasaki did a lot of damage. Japan is now one of the biggest buyers of US Treasuries, second only to China in the past. Japan's holdings of US Treasuries have dropped by over 21% since 2020, and China, which is the second largest user of US Treasuries, has cut its holdings by 44% since 2013. These changes have happened in just the last 3 months. Japan has sold U.S. Treasuries worth $61 billion, and China has sold U.S. Treasuries worth $51.3 billion. These numbers show that both Japan and China are selling more and more U.S. Treasuries. These large sales have major effects on the U.S. economy and the security of the global financial system. The drop in foreign holding of U.S. debt made people wonder what the U.S. will do with its economic strategies in the future. Rate of interest and the dollar's job as the world's main currency. The recent re-election of Donald Trump, whose foreign and economic policies have been known for being unpredictable and putting America first, is setting the stage for these changes in economic behavior by two of the U.S.'s biggest creditors. These changes could put pressure on their relationships with the U.S., which could change the way the global economy works. In this film, we look at this important event by looking at its historical background, its economic effects, and the political situation that could affect our future. Japan, China, and the wealth of the world. Let's talk about how the U.S. and Japan have gotten along over the years. A look at Japan's relationship history, early encounters, and Japan's opening up in the 19th century for more than 200 years. In the past, Japan had a policy of self-isolation called soku, which meant that no one from outside of Japan could enter or leave the country. This changed in 1853 when Commodore Matthew C. Perry of the U.S. Navy arrived with a fleet of black ships and forced Japan to open its ports to foreign trade. The Treaty of Kanagawa in 1854 was the start of official diplomatic relations between the two countries. After the Meiji Restoration in 1868, Japan quickly modernized, drawing ideas from Western countries, including the United States. During this time, the two countries kept relations relatively friendly, with the U.S. recognizing Japanese control of Hawaii and the Philippines, and Japan recognizing U.S. control of Korea. During World War I, the U.S. and Japan were allies against Germany. However, in the early 20th century, tensions between the U.S. and Japan grew due to their differing interests in the Asia-Pacific region. Japan's imperial ambitions, especially its plans to expand into China and Southeast Asia, were at odds with American economic and military interests. To stop Japan from being aggressive, the U.S. reacted with economic penalties, such as oil and other essential materials embargoes. These steps made things even worse between the two countries, which led to Japan's surprise attack on Pearl Harbor on December 7, 1941, which brought the United States into World War II. After Japan gave up on September 2, 1945, the United States led the Allied occupation of Japan, which was a big time of change for the country. General Douglas MacArthur was in charge of a series of political, economic, and social reforms meant to make Japan more democratic and less militarized. When a new constitution was released in 1947, it set up a parliamentary democracy, made the emperor a ceremonial head, and protected basic human rights like freedom of speech, assembly, and religion. Article 9 of the Constitution, in particular, stopped war from being a sovereign right and banned the keeping of armed forces. Land reforms were put in place by the occupation authorities, who took land from large landlords and gave it to tenant farmers. This cut down on tenant farming and improved economic equality. Also, the Zatu large industrial conglomerates were broken up to spread economic power and encourage competition. During the occupation, changes were made to schools to promote democratic values. Women's rights were expanded, including the right to vote, and labor unions were encouraged to protect workers' rights. These changes laid the groundwork for Japan's growth and transformation into a peaceful, democratic nation. In 1951, the Treaty of San Francisco officially ended the war between Japan and the Allied powers, restoring Japan's sovereignty. At the same time, the U.S. and Japan signed the Treaty of Mutual Cooperation and Security, which set up a military alliance that let U.S. forces stay in Japan in exchange for a promise to defend Japan if it was attacked. This alliance helped Japan focus on getting its economy back on track, which led to rapid growth and Japan becoming a major economic power by the 1960s. During the Cold War, the U.S. and Japan had a strategic relationship. The Japan alliance was a key part of the United States policy in Asia to counter the impact of China and the Soviet Union. The two countries worked together on many economic and security projects, and Japan helped with logistics during wars like the Korean War and the Vietnam War. 21st century developments. Over the past few decades, the U.S. and Japan have continued to strengthen their alliance, dealing with new problems like North Korea's nuclear program and China's growing assertiveness in the Asia-Pacific region. For example, in 2015, Japan changed its constitution to allow for collective self-defense, which allowed for more military cooperation with the U.S. The two countries have also worked together more on cybersecurity, space exploration, and climate change. Now let me show you how China has held U.S. Treasury securities over the years. From 2000 to 2024, China's holdings of U.S. Treasury securities changed a lot. This is because of changes in the economy and politics around the world. In the early 2000s, China quickly accumulated a lot of U.S. Treasury securities. This was caused by a number of important factors. China's growing trade deficits with the U.S. caused the country to build up a lot of foreign exchange reserves, which needed to be managed well. China was looking for safe and flexible ways to spend, and by November 2000, U.S. bonds had become a popular choice. To keep its export market competitive, China held about $58.9 billion worth of U.S. Treasury securities. China followed policies to keep the yuan undervalued. As part of this strategy, they bought U.S. dollars, which flooded into China's economy and created huge foreign exchange reserves. A big chunk of these reserves were put into U.S. Treasury securities, which were seen as a safe investment and a big enough financial market to hold China's extra cash. China also diversified its holdings by putting money into U.S. government agency instruments, non-government business securities, and stocks. However, U.S. Treasury securities were still the biggest type of U.S. securities that China owned. Let's take a short break. If you've liked the movie so far, could you do us a favor? Clicking the like button helps us reach more people, and leaving comments with your thoughts or feedback has an even bigger effect. Thanks for watching, and now let's go back to peak holdings. 2013. China continued to buy U.S. Treasury securities over the next 10 years, hitting an all-time high of $1,167 trillion in November 2013. This peak made China the biggest foreign buyer of U.S. debt at the time. Because China had big trade deficits with the U.S., a lot of U.S. dollars came in. By the end of 2013, these dollars were put in U.S. bonds to keep the exchange rate stable and inflation under control. It had more than $382 trillion in foreign exchange reserves, with a big chunk of that amount invested in U.S. Treasuries. Investing in U.S. Treasuries gave China a safe and easy way to use its foreign exchange reserves to support its economic growth and stability goals, slowly lowering. It hit a high point of $131.7 trillion in November 2013 and will stay that high until 2024. China's holdings of U.S. Treasury securities started to slowly go down. By September 2024, they had dropped to $731 billion, which is a big drop from the highest point. This falling trend is caused by a number of things. China wants to reduce the risks that come with having a lot of U.S. bonds in its foreign exchange savings. As part of this plan, it is investing more in other currencies and assets to ease tensions in the U.S. relations between the U.S. and China, especially when it comes to trade and technology, have an effect on China's investment plans. Lowering U.S. Treasury holdings is part of a larger attempt to lower U.S. debt. Depend on U.S. assets. Focusing on increasing domestic consumption and lowering its exposure to changes in the world economy has caused China to change its foreign asset allocations, including a decrease in its holdings of U.S. Treasury securities. Despite the decrease, China is still the second largest foreign holder of U.S. Treasuries, after Japan, which held approximately $1.15 trillion in U.S. Treasury securities as of April 2024. China's decrease in its holdings is a strategic move to diversify its foreign exchange reserves and a response to changing economic conditions. This trend means something for us. The support of U.S. debt and the two countries' overall economic exchange. These two countries hold the most U.S. government debt of any countries in the world. According to data released by the U.S. Department of the Treasury on Monday, Japan and China sold a lot of Treasury securities in the third quarter. Japanese investors sold a record $61.9 billion worth of U.S. bonds during the 3 months ending September 30th. Chinese funds sold $51.3 billion worth of U.S. bonds during the same period, marking their second largest sell-off on record. Yields on U.S. Treasuries hit a 2.5-year high in mid-September, before the Republican Party won both Congress and the White House. Since then, the value of these securities has dropped nearly 4% because of worries that President-elect Trump's policies of low taxes and high tariffs could cause inflation. Japan's sell-off may have been boosted by its actions in the foreign exchange market on July 11th and 12th, when the Ministry of Finance bought yen with dollars worth a total of 5.53 trillion yen, or $335.9 billion. Recently, Japan and China have been selling less U.S. Treasury securities. This could have effects on the U.S. economy. Large buyers of U.S. Treasuries like Japan and China could sell a lot of them, which could cause the bond market to have too many bonds, which could lower bond prices and raise rates. Higher returns mean that the U.S. government, companies, and individuals will have to pay more to borrow money, which could slow down economic growth. When foreigners sell U.S. bonds, it can change how much people want to buy U.S. dollars. If there is less desire for the dollar, it may lose value. This could affect international trade by making U.S. exports cheaper and imports more expensive. This could be good for exporters, but it could also cause prices to rise. Large-scale selling of U.S. bonds by major foreign buyers could mean that they don't trust the U.S. government's economic health. This could make financial markets more volatile and raise worries about the U.S.'s ability to keep up its debt levels. Japan and China's recent declines in their holdings of U.S. Treasury bonds will be very hard for the new Trump administration, especially when it comes to economic policy and dealing with other countries. If foreign investors stop buying U.S. bonds, interest rates could go up, making it more expensive for the U.S. government to borrow money. This situation makes it harder for the government to carry out big fiscal policies like tax cuts and spending on infrastructure because it costs more to finance deficits. In order to get different buyers, bigger returns may need to be offered, increasing the cost of borrowing even more. High interest rates on loans can slow down economic growth by making people and businesses spend less. Funds invested also, if the Federal Reserve acts to higher interest rates by making it harder for people to borrow money, it could slow down the growth of the economy. If foreigners don't want to buy as many bonds, the dollar will weaken. This could help exports, but also make inflation worse, which would make it harder for the government to reach its economic goals. Japan and China may be lowering the amount of U.S. Treasury bonds they hold because of how they feel about U.S. trade policies. The Trump administration's stand on trade issues like taxes and trade deals could have an even bigger effect on these countries' business choices. A tense economic relationship could lead to retaliation actions that change the dynamics of global trade and the administration's foreign policy goals. That's it for this video. Thank you so much for watching. If our content spoke to you or inspired you, please show your support by liking it and following to stay in touch with our community.